Jobs growth in the U.S. was stronger than expected last month, in part boosted as striking workers in Hollywood and the car industry returned to work. Employers added 199,000 jobs in November, the Labor Department said. That helped to push down the jobless rate to 3.7%, the lowest level since July. The monthly report is being closely watched as the U.S. Central Bank tries to cool the economy to reduce inflation, the rate at which prices rise. The Federal Reserve has raised interest rates to the highest level in more than 2 decades in an attempt to slow price rises, and investors are increasingly betting that rates have peaked for now and may even start to fall next year. But the latest figures, while welcome news for job seekers, may confound those hopes. As well as stronger than expected job gains, the report showed average hourly pay ticking up 0.4% from October. Average hourly earnings have climbed 4% from November 2022, a rate that analysts said was too fast for the Fed to declare its job is done. The strength of the U.S. economy over the past year has defied expectations and persistently glum economic sentiment. In the most recent quarter, it expanded at an annual rate of 5.2%, well above the trend in pre-pandemic years. Why Americans' YOLO spending spree baffles economists. How bosses won the fight for power in 2023. A strong labor market has helped sustain consumer spending, the main driver of the U.S. economy, though some retailers have warned of weakening sales in recent weeks. Last month's job gains were driven by hiring at healthcare and manufacturing firms, as well as the government. Payrolls at retail, warehousing, and transportation firms fell, despite heading into the holiday season. Lon Shepardson of Pantheon Macroeconomics said the drop could be a sign that retailers are already nervous, but might also reflect quirks from the labor department's efforts to adjust for seasonal trends. Overall, the U.S. has added an average of 240,000 jobs per month over the past year, the Labor Department said. While job growth is falling compared to last year, it is holding up remarkably well in the face of a tough economic picture and slowing growth globally, said Richard Carter, head of fixed interest research at Quilter Cheviot. When the Fed started raising interest rates, many analysts warned it could trigger an economic recession if higher borrowing costs prompted firms and households to slow spending dramatically. That forecast has been increasingly abandoned. Mr. Carter said, the full effects of the rate hikes have not yet been felt, so the picture could deteriorate from here. But for now, the economic picture is looking strong in the U.S., and that will leave the Fed heading into next year feeling just fine about the job it has done to date.